everybody. Good afternoon. I hope you are doing well. This is Sami from the Black Room. I wanted to record a video for you here on multiple time frame analysis. Truly, in my opinion, the number one reason why traders fail. Technicians, chartists, this is the hardest thing for them. I don't know why that's the case. I have an idea because a lot of people just don't know about multiple time frames and the need to use more than one time frame when analyzing your trades. So let me show you how I do it, okay? I can only project a couple of time frames at a time. I use the 1 minute, 2 minute, 5 minute, 15, hourly, daily, weekly, and monthly. The weekly and monthly are typically more for position trading, swing trading, but I use all these time frames when I'm trading. But I can't project all of that. So I'm only going to project a couple of time frames. And I thought I'd just project the 5 and the 15. So when taking a trade, before I take a trade, I have to check and make sure that if it's off the 15-minute chart, that the 5-minute looks good. What does that mean by looks good? I mean, here's the afternoon trade that I took in the black room, SFM, short. If I'm calling a short on this, if I'm trying to short this, I want to make sure that it looks good on the 5, that it's under the 20, not breaking into the 20 MA, right? And then the 5 also is downtrending. So the 15 is in a downtrend, triggering what is known as a sell setup. This is also a rounding top. Okay, triggered short, no, under the bottoming tail. So if we look at the 5-minute, that's the bottoming tail. So under this bar's low, short, notice on the 5 looks good. The trade was off the 15, but I want to make sure the most important time frames that you need to make sure are in alignment with the time frame where you find the setup are the one time frame larger and the one time frame smaller. With the exception of the 15-minute time frame, the next time frame up that I use is the hourly chart. I don't use the 30 minutes. So it's too far. I mean, there's too large a time frame, the hourly chart. So I don't really need to make sure the hourly is good because it usually is. Um, but if I were to take a 5-minute play, then I must make sure that the 15 looks good and the 5 looks good. And all three time frames or the direction of your trade is also in sync, in harmony with the daily time frame or with the larger picture. So why did I take this? Because the daily was a gap down. Does that make sense? The daily was a bearish gap down. So there were two trades on this. There were three trades. The morning trade, which I'm not going to cover right now, the morning trade in the black room, and then this trade under the bottoming tail, and then the add and reduce, meaning we added shares to the trade under the green bars low, under the 1, 2, 3, and reduced the stop, and then trailed it to 70, which was 69 was the low here, and then it popped. So this was, I know this was only about 45 cents on the initial trade and not even quite 40-cent gain on the secondary trade here, but it made a lot of money. When I say a lot, I don't, not a ton, but it made my whole day, 3,900. Again, there was a morning trade and there was an afternoon trade. Okay. Now let's take a look at, is there anything else that I can show you here that would show you multiple time frames? Some of these were scalps, or this was a Climo, but I didn't really trade it well. None of these are needed multiple time frame alignment. So I'm gonna have to look at yesterday's. What's yesterday? Okay, the 29th. The 29th. So this is, yes, those were yesterday's trades. Um, so the EXPR, let me show you the EXPR from yesterday. So this was called the short, right here, short, under this tail, stop above it. Let's see if the 5-minute looked okay. And the 5-minute was also breaking down under the moving average. So this was good. And then we ran out of time, but it worked as a short. So it was a 15-minute, it was really a presumptive hourly sell setup. That's what it was. If you look at the hourly chart, it was a presumptive hourly. So this is not the best example to talk about. CHS was a gap trade, I think. TLYS. Let me show you the TLYS. Let's take a look at it. TLYS was, when I took it, was in a downtrend on the 15. It was under 1238, I believe, or 1230, 1230 maybe. Short in a downtrend on the 15, but also in a downtrend on the 5. So it was just all out bearish. Okay. The TLYS. Was there anything else that I can show you from this day? How about the prior day? So that was Thursday. How about Wednesday? CHS morning trade. So I wouldn't be able, and this was a climactic trade. So I wouldn't be able to show you the, so meaning there was no need for multiple time frame. About the day before that, GSM a gap trade. Okay, so not every trade, especially if they're early morning trades, not every trade requires multiple time frame alignment. If it's a gap trade at the open, you don't have trends yet. So that's why I'm not able to show you, to go over the multiple time frames for those trades. But let me show you from today, for example. I'll show you some things that I saw but didn't have multiple time frame alignment. Here's the ELY, short. Nice looking sell setup, right? Let's take a look at the 5 minute at that same time, today's trade. So this was, let's say, around 2 o'clock. At 2 o'clock on the 5 minute today, so here's the 2 o'clock. Did the ELY have multiple time frame alignment? Look at this, declining 20 on the 15, rising 20 on the 5 minute chart. Above, price was also above the rising 20 on the 5. So no, that's a good example actually when you have a sell setup on the 15-minute chart and an uptrend on the 5 minute. So how can you play it? If you really wanted to play it, how could you have played it? Well, we would have had to wait for a buy setup to fail, and then you can play under short if you got a buy setup failure. Or the other scenario in which the uptrend would have broken is if the stock would have just sold off, and then in which case you could look to play the next rally and sell setup off the declining 20. Does that make sense? But I would never play something short on a sell setup on the 15-minute chart in this case if the 5 minute was uptrending and above the moving average. Does that make sense? So in this case, again, I could have played it if it had done one of two things. We got the buy setup and the buy setup failed. So under the pivot, it would have also been under the 20 MA, stop up here. Or if it just worked, it dropped, then gave us a rally and a sell setup off the declining 20. Does that make sense? So that's how I could have played it, but it never set up as such. It just went higher. If we look at some more examples, let's take a look. I'm going over the gaps list. A VMW, for example. Here's a 15-minute buy setup. It wasn't really a good 15-minute buy setup, but let's just say it was. Let's just pretend we were contemplating taking it long. Here it is as a long, right? Was the 5 minute at that time, did the 5 minute look good? Was price above the moving average? Did we have also a rising 20 MA on the 5 minute chart? The answer is no. If the answer is no, then no play. Does that make sense? No play. How could we have played it? Well, if it had gone up maybe and based, which it sort of did, in which case you can play above the base, because at that point it would have been above the moving average on the 5, and the 15 we said we were okay with, then you have alignment between the 5 and the 15. All right, next thing on the list is LH. Okay, LH, let's say this was a good 15-minute sell setup off the right at the declining 20. What time was that? At 2 o'clock also. 2 o'clock. Here's 2 o'clock on the 5 minute chart. Did that look good short on the 5 minute? Did that look good short? No, it didn't. We had a rising 20. The stock was in an uptrend on the 5. So here's an example where the smaller trend does not match the larger trend, right? The 5 minute does not match the 15, in which case no trade. Does that make sense? No trade. MAR, Okay, so MAR, okay, if you wanted to do the MAR breakdown, let's just say this came up in the room today. If you wanted to do the MAR breakdown on the 15-minute chart right here, short, could you have done it short? Could you have taken it? Yes or no, based on the five? Yes or no? Yes. Price was trending bearishly under the declining 20, which is the blue line on the chart, by the way. Then no issues. This is saying lower, and that was saying lower. No problem, take it. So that's an example of a chart that did have multiple time frame alignment. Here's another one. PAGS, short on this, let's just say this run up. It wasn't good, but let's just say you wanted to short this sell setup. Okay? At 1 o'clock. At 1 o'clock, did this look good short on the 5-minute? With a rising 20 in an uptrend? The answer is absolutely no, not. It did not. So how could you have done it? Well, again, you either wait for a buy setup failure and you short under the 20, or if the stock drops and just keeps going, then you can look to do the next sell setup, short off the declining 20 also. So either a buy setup failure or a sell setup. Okay, it dropped. Let's maybe see the rollover. We never got it. It just went back up. And this is precisely why you don't want to do anything that doesn't have multiple time frame alignment, because as you can see, the sell setup on the 15-minute failed. Not necessarily because the 15 was so bad, but because the 5-minute was in an uptrend. So when it triggered short on the 15, the 5-minute was actually at support in an uptrend, went back up. So this would have stopped out. Okay, SFM we talked about. This had a good example of multiple time frame alignment. This is the trade that made all the money today. Okay, and not just me, if you know, not just me here. Made SFM ELY made for a very nice day, great calls, right? So room members also. YEXT, short, right here, off the 15-minute sell side. It worked. It worked nicely. But let's take a look at the 5. Did the 5 have, at that same time, did the 5 look good? And my answer would be no. Now, I can go into more because it was uptrending, right, into the rising 20. It wasn't really into the rising 20. There are other things on this chart that would have that would have allowed me to get in it, such as the volume, right? Such as the run up extended from the 20, and so there's plenty of room to fall. There was, so this worked, but in general, if I'm going to do a short on the 15-minute, if I'm going to do a sell setup on the 15-minute chart, I must wait for a downtrend on the 5. And I also want price to be under the 20 MA. Also, again, the blue line. Let's see, ZUO, sell setup on the 15. Let's just pretend this was a good sell setup. It wasn't. Right here, short. Okay. Did it look good at that same time on the 5-minute? Did it look good? Look at the rising 20 on the 5. No, it didn't. Right? It didn't. I'm using a different platform today because my other platform, Realtek, I'd have to constantly be scrolling back every time I change a symbol. So hopefully this platform is clear enough still. I, as a short, 15-minute sell setup. At that same time on the 5-minute, did it look good? Look at the rising 20. No, it didn't. So no play. And as you can see, trigger short on the 15. Did it work? Nope, it didn't. Stopped. Would have stopped. EXPR. Well, EXPR we talked about yesterday. So I guess that's it. I just went over some of the gappers today. Not necessarily the ones that I played. I mean, just going over the list of gaps. The ones that I played, I showed you already. Those are the ones that I played. SFM made my whole day, basically, most of it. All right, guys, this was a lesson on multiple time frame analysis, which, in my opinion, is the number one why traders, chartists fail. Um, I just want to take a second here to show you actually how I use also multiple time frame alignment on the cues on the market, but in general, not just the market, between the daily and the hourly. Let's say there was a sell setup. Now, in order to get a sell setup pattern, you need to have three or more green bars in a row, and then a prior bar's low needs to get taken out. So we don't have a sell setup here yet, but on the Q's daily chart. But on the hourly chart, even if we did drop here, even if we did trigger short, would I be interested in taking that sell setup short? Would I, given the hourly chart? Look at the hourly chart. Look at that rising 20. No, I wouldn't. In order for me to become bearish again, I was bearish on the market. In order for me to become bearish again on the market, I would need that hourly uptrend to fail. How can it fail? Well, it can gap under the support and under the 20. Or if it doesn't, maybe it falls hard, and then I can play the next sell setup off the declining 20. In this case, it would be the beginning of a downtrend on the hourly chart, and we already have a downtrend on the daily. So we do, in this case, we would have multiple time frame alignment. At the moment, there isn't. The hourly is saying up, and the daily, well, it hasn't triggered a sell setup, so it's not ready yet. But even if it was, given the hourly uptrend, I would say, I would still not say it's ready. Does that make sense? So just showing you different time frames here, 60 and daily, which I use a lot for swing trading. And when I'm analyzing the market, I use the 60 and the daily. And when I'm analyzing the intraday, when I'm looking for trades in the afternoon, I'm analyzing the 5 and the 15, which is what I showed you a few minutes ago, the 5 and the 15. And I want to make sure they're in alignment. Okay. So I hope this was helpful. I wanted to record this video for one of the room members, and he asked me to record a video for him to help him with multiple time frame alignment, and I thought I would just do a live stream to Facebook so that everybody can benefit from it. So I hope you enjoyed today's video. I hope you're doing well. I thought this week was not really the easiest, to tell you the truth. So I'm kind of glad it turned out okay after all. Um, Today was pretty nice. Well, here's my platform. It's already open. That's today. And then yesterday was nice. Not that nice, but that's pretty good. The day before that was the easiest day. And then the day before that was good. So it was a good week after all, but I thought it was not the easiest. Um, I hope you enjoyed today's video. I hope you're doing well in your trading and personal life as well. If you need help with your trading, check out the Black Room. Uh, you'll be impressed with the level of help that we provide, as well as some pretty awesome, pretty sweet trades. So feel free to check out the Black Room. If you need to um, find out how to sign up, just contact customer service at T3 or go to t3live.com. And wish you all the best. Have a great weekend and talk to you next week. Take care, everybody.